with today's topics. Today's topics include green hydrogen, that is part of our GS1 and 3. Then how has the insurance sector performed? It will be also covered for GS3. Rupee globalization, part of GS2 and GS3. RBI's mandate about LCR for banks. So let us do the first one, and it is the green hydrogen push. You see, green hydrogen actually has been the talk of the town because of number one, the climate crisis that we are having. So the race for clean fuel is one which is asking us to go for those fuels which are clean, provide the energy plus the security of the energy. Green hydrogen is looked at as one of the cornerstone to provide this kind of fuel. So what is green hydrogen? Hydrogen is basically a colorless. So first of all, you can be asked that what do you understand by green hydrogen? What is the difference between gray or other hydrogen versions, and how it can contribute to India's energy security? So you can proceed like this, that hydrogen is a colorless and green hydrogen is green by virtue of how it is produced. So green hydrogen is called green hydrogen because the way it is produced. Green hydrogen refers to hydrogen that is produced from electrolysis of water, splitting it in two. So there is a water. So splitting of water into hydrogen and oxygen, and that through an electrolyzer that is powered by the renewable energy. What is the renewable energy? Solar energy, wind energy, nuclear energy, these are renewable energy. So the hydrogen means the water actually that is broken into hydrogen and oxygen, the electrolyzer is powered by renewable energy. This is considered to be virtually emission free for hydrogen production. It is end to end green. End to end means the way actually we break hydrogen oxide means H2O into hydrogen and oxygen individual atoms. So this is end to end green because it is powered by green energy, uses water as a feedstock, and it emits no carbon for consumption. So number one, the electrolysis process is powered by the green energy. Number two, it uses water as a feedstock. And number third is it emits no carbon on consumption. That's why the hydrogen that is produced by this way is called green hydrogen. So now you understand what is the definition. Currently, most of the hydrogen that is produced for say industrial applications or for other application is gray hydrogen. And what is the gray hydrogen? It is produced from the natural gas. How it is produced? Produced from the natural gas through energy intensive processes. So natural gas plus energy intensive processes. So it means it is not powered by the by the clean energy, just like the green hydrogen is powered. A difference in the production pathway and emissions. Green hydrogen is essentially when we remove actually these kind of differences. Suppose say number one, the energy that is provided by the clean energy, etc. Except these things, the hydrogen that is produced by hydrogen that is produced by other means, or hydrogen that is produced and called green hydrogen, both are similar, but the manner in which the electricity or the energy process that is provided makes them different. So green hydrogen and gray hydrogen, you got the meaning of it. So Ministry of Renewable and New and Renewable Energy, that is called MNRE, Ministry of New and Renewable Energy, has announced 496 crore rupees scheme to support pilot projects that either test the viability of green hydrogen as a vehicle fuel or develop secure supporting infrastructure such as refueling mission. You must understand that India has announced a green hydrogen mission also to make our country energy secure, plus even produce 50% of our energy requirement through renewable energy resources. We are also planning to make our cities energy clean, so that the city air quality can also become breathable. Hydrogen is expected to be widely used in transportation sector in the coming years. So what is the utilization? So utilization is in the transportation sector. There is a growing market for both vehicle and energy, and India stands to gain significantly from the large scale adoption of green hydrogen as a vehicular fuel. So number one application is in the vehicular fuels. Number second application is in the industrial fuel. Green hydrogen promises, that is why, significant reductions of emissions. So we can meet our climate goal also. So when somebody actually asks us in the exam that why it is important, you can always mention. So that you can also mention that Indian Ministry of New and Renewable Energy has also announced a 496 crore rupees mission to support pilot projects. So they will do what? Technical feasibility, they will check performance of green hydrogen as a transportation fuel, evaluation of the economic viability of the green hydrogen powered vehicles, and demonstration of the safe operation of hydrogen powered vehicles. Hydrogen fuel cell vehicles. You see, a hydrogen internal combustion engine vehicle utilizes hydrogen through combustion, which is similar to cars running on petrol and diesel, except there are no carbon emissions. So when there are vehicles which are running on petrol and diesel, or those are internal combustion engines, so the difference between how hydrogen is used and how petrol and diesel is used are all similar, but there are no carbon emission if you use hydrogen. A hydrogen fuel cell electricity vehicle utilizes hydrogen electrochemically by converting hydrogen that is stored in a high pressure tank into electricity, leaving water as a byproduct. Even though hydrogen internal combustion engine vehicles do not emit carbon, research suggests that burning hydrogen is far less energy efficient than converting it into electricity in a fuel cell. So this makes hydrogen fuel cell technology a viable alternative to electric vehicle technology also. So whenever you are writing about the comparison of hydrogen powered and the electric vehicle powered, you can write that hydrogen actually can be rather a better alternative or viable alternative to EV battery technologies, especially for the heavy truck. Because number one, the process of combustion engine is same as the carbon as the diesel and petrol engine are burned. Battery electric vehicles in which battery is the heaviest part, hydrogen are typically much lighter. So those fuel cell electric vehicles which are powered by the hydrogen are number one, typically lighter, because hydrogen is a light element in itself. So that's why it becomes a viable alternative to electric vehicles. So these are the benefits of hydrogen over conventional vehicles also. When we talk about the long haul fuel cell electric vehicles, they can carry freight amount to similar of the diesel trucks. So that also, gives a good thumbs up to the green hydrogen process. Green hydrogen powered vehicles are not yet seen as suitable alternative to four-wheel vehicles because of the challenges arising from fuel costs and building supporting infrastructure. So in advancement of the technology, battery technologies, etc., it will continue to reduce the overall weight of the EV batteries also, and the long-term viability of green hydrogen powered heavy duty vehicles could also come then under pressure. But as of now, the hydrogen or green hydrogen powered vehicles, so you can also write it as a challenge that green hydrogen will be competing against the electric vehicles. Although electric vehicles as of now, the battery those are powered are more heavier, that actually increases the amount of cost those are attached with the electric vehicles. But the green hydrogen as of now is viable. But once the electric vehicle battery technologies get even more efficient and the battery weight reduces, then we may be having a situation where the electric vehicles will become more viable compared to green hydrogen. But that time the green hydrogen itself will be a mature technology. So these are the challenges of the green hydrogen also. So you have written down everything. First of all, you understood the meaning of green hydrogen. You understood the difference between green hydrogen and other variables of hydrogen. You also understood actually the viability of the green hydrogen, how it is produced, what kind of policies the government is taking, and how it is better viable than the electric vehicles as of now, and what are the threats actually a green hydrogen may be having whenever we talk about the future burning of the technologies, future of the technologies, etc. So you can write down each and everything that you have understood in this particular chapter. Now we go to the strong growth for the insurance sector. So insurance sector is number one, very, very important for ensuring the social security of the people. It can go a long way Number one, insurance, why it is necessary. You must have seen that insurance for vehicles is a big of the, I mean, the biggest market. Personal insurance are also emerging. Health insurance is also emerging, and other insurance like other commodity insurance etc. are also emerging. These commodity insurance are like just mobile insurance also. So what insurance provide? Insurance provides you whenever you are writing about. So in GS3, the insurance component can also be asked. So in this one, you can mention that insurance is necessary to number one, provide a security of the life to the people. It provides security of the livelihood opportunities as well. Suppose say if someone dies, then if he is insured, then the amount actually that is provided to the family, it can be a helpful thing for the family to live their livelihood. If vehicle insurance etc also reduces your cost if your vehicle get disturbed or get accident or meet with accident. So insurance is definitely necessary for a human. Insurance is necessary in the sense that when he is involved in some employment and he if insured, then all those social security benefit, those are provided like pension benefit or the termination from the job benefit etc, can give him security for 2 to 3 months till the time he gets job fresh. So the insurance sector is having some sort of strong growth, but there are miles to go. In India, you must have also seen that foreign direct investment has been allowed in insurance sector up to 49%. 49% of the FDI can be done in the insurance sector. The insurance sector recorded rapid growth over the last decade. New products were launched in non-life segment and digitization helped improve its reach. So what were the reasons behind the strong growth? You can also say that number one, the foreign direct investment that was increased to 49% in the insurance sector. Number two, the new products were launched in the non-life segment. Non-life segment, suppose a mobile industry. Non-life segment, say vehicle industry. Non-life segment in other also benefits. So, and third is the digitization that helped improve the reach of the insurance, because digitization actually improves the reach with which we can launch the product and we can make the product accessible to the person sitting at the remotest corner. Insurance industry, fourth, you can also write that insurance industry has grown close to 8% annually in the last 10 years. So there is a compound annual growth rate of close to 8% of this insurance industry. Non-life insurance segment has clocked a growth rate of somewhere around 10%, while the life insurance has somewhere around 7.6%. So whenever you talk about the insurance, you can also write that the life non-life component and the life component of the insurance sector has clocked different rates of growth. The non-life sector has crossed around 10%, while the life segment of the insurance has clocked growth of somewhere around 7.6%. And the overall growth of the insurance sector has been close to 8%. Whenever we talk about the insurance industry, then insurance industry LIC is the biggest one that has close to like 229 billion rupees share, then SBI and then HDFC. So you can also write that the insurance sector in our country is more or less controlled by the public sector, especially by the LIC, and second rank is by the SBI. Private sector also contributes to its growth. In non-life insurance sector, this is in the non-life part, actually it is dominated by the public private sector, especially like New India Insurance or ICICI Insurance, etc. So that is the state of our insurance industry. So whenever you are writing about the insurance industry, so the question can be asked in this format: what is the insurance sector, how it is important for India's growth? Or the question can be also asked that insurance industry in the past few many years has seen the growth, but what are the challenges, or which are those areas which we need to still look upon? Whenever we are talking about the ULIP segment also, ULIP regulation, ULIP regulation of 2019 tried to ensure that insurers follow prudent practices in designing insurance products and keep the interests of policyholders at heart. So this was also one of the important contribution towards the strong growth in the insurance sector. So you can write this point also, that the ULIP regulations of 2019, which tried to ensure that the insurers follow prudent practices in designing insurance products and keeping the insurance or interest of the policyholders at heart. Insurers were also encouraged to participate in a regulatory sandbox in 2019, which had the objective to increase the pace of innovation, and that is why the innovation in product categories has also increased. You must have also seen that the new products are also being launched in both non-life and life segment of the insurance sector. When we talk about the regulator of it, so the Insurance Regulatory and Development Authority of India, called IRDAI, has implemented a significant change in the product filing process for life and non-life insurance since 2022 and 2023. So that has also contributed to the better product filing process. So the transition from traditional file and use procedure to use and file procedure has also assisted general insurers in designing and promptly launching new and innovative products. And that's why insurance industry has been able to launch the products at a better prices and at a better time and scale. Insurance industry and regulator were also quick to respond to the COVID-19 pandemic to deal with the crisis with the specific product-centric launches at the time also. So these are all the things actually which we are seeing in the insurance industry. A major catalyst for positive shifts in the insurance industry in the last 1 decade was the pandemic. So that also created a big push. So whenever we are talking about the hit and misses of this, then you can say that increased emphasis on digitization helped, expanding the FDI limits helped the insurance sector, strengthening distribution channels also helped it. Absently, but what are the challenges? So absently low life insurance penetration. Still, India has miles to go for the life insurance sector to improve. Mis-selling of insurance product is also one of the another problem that is standing in front of the insurance sector. And then the third one is the problems in the claim settlement. Whenever there are claims, those are pending, the claim settlement also is a particular issue. So these are the hits and misses of this particular sector. We now move on to the third one. Still a long way to go from rupee globalization. So what is the rupee globalization? You should understand. Using rupee at a global scale can be helpful. So internationalization and the rupee globalization is both actually the similar thing. Whenever we talk about internationalization and globalization of the rupee, what does we want? We want that it's a process that involves increasing use of local currency in the cross-border transactions. Whatever the cross-border transactions that we have are facilitated by the rupee itself. What does it do? So number one, it improves actually the visibility of our currency in the international markets. Whenever the transactions are settled in the rupee itself, the transaction costs also lowers, because whenever suppose say you are doing a trade in an international currency, then some sort of transaction costs are also there, some sort of logistic costs are always involved. So when your rupee is actually used for that to settle the transactions, then your dependence on the international currency, especially dollars, decreases. So that you reduces the transaction cost plus the logistic cost for a product or category. Number third, when the rupee is used in the international transactions, we don't have to worry about the volatility that is seen in the rupee prices. Suppose the rupee today stands at $80, tomorrow it stands at $83. So that kind of problem may not be affecting our import and export, and we can say that inflationary tactics because of the import prices of particular products. So that can also help us in this particular thing. But what are the challenges of this? Number one, the challenges can be that rupee is not that strong which can compete with other currencies as of now. Its special the drawing right that it has in the IMF are also not that strong where it can act as a buffer for the rupee. Number third, also, lot many countries, despite actually we are having a bilateral sort of mechanisms with them, bilateral mechanism where the trade is being settled, whether it is Russia, whether it is UAE, whether it is other countries like say Sri Lanka, etc. The trade is now being settled in their local currencies. So when you are doing a local currency, fine. Suppose say Russia actually sold us oil, and we paid them in rupee. So now Russia would be investing those rupee that it has got either to get the export from India so it can pay back into rupee, or otherwise it can invest this particular rupee in our Indian geography. So these two things only Russia can do, or the country which is exporting its product or India is importing its product from. So suppose say we have given 100 rupees to Russia for oil. Now this 100 rupee Russia has to purchase either Indian investment, or number two, it can, spend this much amount on the exports. But you must also understand that India is primarily an import driven economy than the export driven economy. India's exports are not that higher. So India's capacity or other countries' capacity to absorb the rupee into their economy by way of settling the payment through export is limited, because they cannot pay India for exports, because the export to those countries from India itself are limited. So how they can make the payment is a challenge. Number two, investing in our country can also be a challenge, because of number one, the investment opportunities for other countries may not be viable in the sectors actually that they want to invest. And third is also rupee is it itself is not an international currency, where if those countries which cannot spend the amount that they raise from imports of our rupee, in the form of our rupee, they cannot actually settle the international transactions that those countries do with third countries also. So suppose say Russia actually cannot settle the trade that it does with China in rupee, because rupee is not an international currency as of now. So these are the challenges that we face in the way of rupee globalization. So number one, there is a demand, but export potential of India is very limited. Number two, INR is basically not an international currency in itself. And third, also you can say that there is a limited opportunity for the investment. That's why manufacturing becomes an important part of us. If India become a manufacturing and a product nation, then India's capacity to attract investment from outside countries increases. So those countries then investing in dollar here, then invest in rupee in our country. So those rupees can be absorbed into our investment segment. Because services sector investment is limited, manufacturing investment will require a next phase of growth. Another is the Indian national rupee is also not fully convertible. Because of it is also not convertible and there are restrictions on the capital transactions, then it can also be a challenge, because whatever the rupee that you have, because of it is not a fully convertible part, that's why it can create its own challenges. So these are still long way to go from rupee globalization. So whenever you are dealing with topics like what is rupee globalization or internationalization of rupee, what can be its benefit to our economy, or what are the challenges, I think you will be able to do justice with this particular topic. Then comes RBI to tweak LCR framework to facilitate better management of liquidity risk by banks. So liquidity coverage ratio framework, RBI is planning to make certain modifications too. And why it is doing? Because of facilitating better management liquidity risks by banks. So banks covered under liquidity coverage ratio are required to maintain a stock of the high quality liquid assets to meet the 30 days net outgo under stressed conditions. They are required to maintain liquidity coverage ratio of 100% with effect from January 1, 2019. At present, the assets allowed as level 1 are as level 1 high quality liquid assets included among other within the category of statutory liquidity ratio requirement, government securities to the extent allowed by RBI. So whenever you are asked about what is the liquidity coverage ratio and what the government is RBI is planning to do, you can mention that the liquidity coverage ratio is one where the banks are required to maintain a stock of the high quality liquid assets to meet 30 days outgo if there are emerging any stress conditions. So these are required to maintain close to 100% with effect from January 1, 2019. Now RBI is saying that we can tweak this framework so the banks can better manage the liquidity risks, etc. So how it can help? Number one, if there is a change in this one, and if the banks are allowed some sort of tweak, then the banks actually can utilize that particular high quality liquidity assets into meeting their other, investment or other, the thing that they give on interest based things also. So banks can, generate more revenue from those funds which are, or maybe just, sitting idle. Fiscal year 25 real GDP projection is seen at 7%, retail inflation at 4.5%. So Reserve Bank of India, according to a particular, forecast, has said that our inflation, real GDP inflation projection can be around 7%, while the retail inflation can be around 4.5%. As you know, RBI has a limitation. RBI has a monetary policy framework plus inflationary framework also. So under that, RBI has to keep the inflation between 2 to 6%. Any inflation which is, plus minus 2 from these particular range, RBI actually has to then file the reasons behind it. So the inflation actually has to be in this range bound territory. So they are saying that the headwinds for protected geopolitical tensions and increasing disruptions in the trade routes is also causing the inflationary risk to spike, and problem on the GDP growth rate can be down also. Because when the shipping cost, or when the cost for transporting the goods are higher, then it can become an imported inflation in our country, and it can cause the inflationary framework. And mind you, when the inflation are at a higher level or not at the comfort of the RBI, what does RBI do? It actually brings the monetary policies to interest rate. So it decides the interest rate on the phenomena of inflation. When the inflations are high, RBI grows the interest rates. It increases the interest rate so that money supply becomes little little costlier. So the demand for money or demand for product actually somehow decreases, and the inflation gets under control. For more such videos, you can like the button and subscribe the channel. Thank you.